let's welcome on board Pawan Parakh as well and talk about what he's making of the market right now. Pawan, hi, afternoon. Highlight for us what so far within the earnings has really stood out for you, either the positive or the negative surprises?
Yeah, hi Aisha. I think so far not many companies have reported their earnings, but whatever is out, I think IT is one sector which we continue to like. I think very clearly from now on or maybe a quarter onward, you should see momentum coming back as far as IT revenues are concerned. So IT is one sector which looks good. Some of the data that we picked up from various channels is that this time around, e-com sales are also being reasonably good, and we're of the view that consumption cycles should rebound back. So within that, we believe a lot of these consumer discretionary companies should start reporting good numbers. And if not good numbers, because Q2 anyways, otherwise is a soft quarter, but I would want to believe that a lot of these companies will paint a very rosy picture as far as outlook for H2 is concerned. So I think very clearly these two sectors look very good to us. And I must also highlight that valuations, while across the markets are very expensive, but in these two sectors, we find that valuations are just fine. I think they're not very cheap at all, but they're not very expensive as well.
Okay, so that's the take coming in as far as the market is concerned and some of these specific segments for the time being in terms of the market mood right now. Apart from AMC companies and these wealth managers, Amber Enterprises is picking up, Endurance Tech is picking up. What's the view on manufacturing? Even BML for that matter, which has got the award for the first bullet train manufacturing, is perking up. Manufacturing, Pawan, had been called that theme for the next decade, if not more than that. Do you concur with that view? And are the valuations already baking in the positive, or do you still see room for re-rating for some of these manufacturing companies?
No, absolutely, Anisha. I think manufacturing is one thing. I think it's a very, very, very long cycle as far as India is concerned. India has to go a long way in achieving its manufacturing goals. And I must tell you, this is not only restricted to a couple of sectors. It is now getting more. It is getting expanded to more and more sectors. And we still believe that traditionally sectors like electronics, wherein we've achieved some success, even there over the next 5-10 years, these companies in this sector will continue to do very well. Here, obviously, given that these sectors, these stocks have done already, I mean, they've done already very well. Valuations are obviously very high. Here, one thing that we are actually looking out for is that which are those companies within the space which can grow at more than 30-40% or on a sustained basis for next 4-5 years. If the growth is sub 25-30%, then I think current valuation is obviously not justifiable. But the good thing is that there are companies which can actually grow at such fast rate, and we continue to remain very positive. In fact, as far as manufacturing is concerned, another corollary to manufacturing is logistics. I think that is one sector which hasn't done well at all. With moderating crude prices, sooner than later, we believe that prices at the pumps will also fall, and with volumes recovering and decent margins, a lot of these logistic companies will also look quite attractive from an investment point of view.
We've been talking about as to how the consumer durable space is looking smart. Take a look at Voltas. We just flagged off that that's one of the buzzing stocks in trade. And Morgan Stanley has now upgraded the stock to an overweight from the earlier equal weight, and they've upped the target price all the way to 2035, and the stock 1881 is where that is. They're expecting a 21% earnings CAGR over FY25 to 27, driven by strong volume growth in the UCP business, and they see moderate margin expansion, however, and they're saying that the worst is likely behind the company for the project business, and its Voltbek is now turning profitable according to them. Pawan, within the entire consumer durable space, you think we're likely to see a volume jump up now that the festive season is on and discounts galore on many of these e-com platforms?
Certainly. I think so there's some part of consumer durable classic cases that of air conditioners and your coolers. I think those are seasonal businesses. The season this time around was quite good. And apart from those, also, I think, consumer durable as a category is fairly underpenetrated as far as India is concerned. And that is primarily to do with two things. One is that India has achieved 100% electrification, so called 100% electrification, only few years back. And as and when electricity reaches to more and more households, and second thing that I was referring to was increased per capita income. As both these things come to play, I think consumer durable, given that it's a fairly underpenetrated category, I would want to believe that the growth here would continue to be at more than 10% for next 5 years.
Okay, so consumer durable play here to stay. Clearly more room available in terms of the penetration. But what about the penetration of financialization of savings? That's a big theme as well, which is working out. There is a increased clamor, Pawan, that there is perhaps a bit of shift back to mutual funds and AMCs versus PMS or direct investing. And perhaps that's the reason some of these AMC companies are reacting positively. What's your view on this space?
See, I would want to, bifurcate between, say, PMS or mutual funds. I know one thing for sure, that equity as an asset class is a great, investment from a retail household investment point of view. And given India's, demography, and given India's penetration for financial products, it continues to be way too low. And now a lot of these financial products have been, it's very easily available through online channels and through a lot of other means. So I would want to believe that, despite India's mutual fund industry, something like 65 lakh crores equity and debt put together, and add up a few lakh crores into, say, for example, PMS and AIF, it could easily be more than 100 lakh crores in a couple of years. And that's primarily true with the fact that, one, equity markets, I mean, earnings cycle itself is doing very well. That is a trend. And secondly, is the fact that apart from equity, no other asset class, has got a potential to deliver such sustained returns over a long period of time. So I continue to remain very positive on these capital market theories, and not only AMCs, but the other sectors like exchanges or broking companies. The entire capital market pack looks pretty interesting to us.
Right. Pawan, do you sense that, perhaps the festive season could pull off some magic for PV sales, or do you think that's not quite possible?
That seems unlikely. Honestly, that seems unlikely for the simple reason that, two-wheelers obviously can do well, but X of two-wheelers, I would want to believe that there's some cyclicality in the businesses there. Last 2 years have been quite decent. If you look at last 2 3 months, there haven't been great product launches in this sector. And secondly, what we understand is that there's a decent channel inventory that got built up in the system. So I would want to believe that, as far as auto sector is concerned, X of two-wheeler, next 1 or 2 quarters could be a little subdued.
Right, okay, that's the take coming in on what we're likely to see from Motown and whether or not there is any uptick that one can anticipate in the festive season. But, that also brings me to the Hyundai IPO, Pawan, if there is a house call on that.
Without any specific comments on Hyundai, I must tell you, a lot of the IPOs that have come up in last, say, a year or so, we avoided all of them without an exception, for the simple reason being that we believe that, valuations for a lot of these strong franchisees factor in all the positives, be it not only Hyundai, but be it Bajaj Housing Finance, or be it other names that got listed in last 1 year or so. So we are good to, skip that for the moment.
Okay, so that's the take coming in. But in the meantime, what else is happening in the market? And let's take a look at some of the losers as well. We've talked about the gainers. On the losing side today, KI Industries continues to be down, but it has bounced back from the lows of the trading session. Cochin Shipyard, that OFS happening at a discount, wasn't taken well. A sentiment downtick at that. BSC, the Jefferies downgrade, is coming at work, and then Trent and Polycab, even Honasa Consumer for that matter, is under pressure right now. Within the urban consumption, Pawan, specifically, and I'm talking about the Trends and Honasas of the world and the Nykas of the world, do you see a bit of a moderation in demand as well as hence the stock prices?
I think here you'll have to, take category by category. I think as far as personal care products are concerned, I don't know what's going to happen this quarter, maybe next quarter, but take a couple of year view. I would want to believe that this category is, given that it is fairly underpenetrated, and a lot of these companies are building up great brands, great customized products. So this is one sector which we actually really like quite a bit. And for some of these companies, personal care, you see these companies enjoy some very great gross margins. So as in when, business gains scale, revenue comes up, I would want to believe that EBITDA margin expansion will be huge, which will help significantly higher than revenue PAT growth, right? So I think this is one sector which looks very good to us. Having said that, some of the sectors, especially on the retail, some of the companies on the retail side, one of the companies that you mentioned, valuations are way too high. They are more than priced to perfection. So we would rather want to stay by the side for such companies.
Quite a few earnings as well tomorrow, and we're going to be looking out for not just Nestle's numbers but Axis Bank. That's going to be important. There's of course Wipro and Infosys as well, which are due to report their numbers. And not just that, it doesn't end there. There's Polycab, you have CET, LTI Mindtree, Tata Chemicals. So it's going to be quite a hectic earnings day, as also Havells and some of the smaller banking names as well. And yeah, Hyundai Motor IPO as well closes tomorrow, so it's going to be an interesting session. In terms of global data points, you'll have the Eurozone CPI, you will have the ECB rate decision. That's going to be quite critical. Other than that, of course, US retail sales data, etc., which is much later in the evening. But that said, Anisha, after TCS and HCL Technologies, what are we anticipating from Infi?
In fact, can surprise the street a bit, because the street is penciling in maybe an uptick in the guidance, because last time they had already increased their guidance. This time there could be a further narrowing of band. In fact, the street is working with an assumption of 4 to 5% growth for FY25 now versus 3 to 4%. So that, of course, is the big headline. But in terms of numbers, the constant currency growth is still expected around 3%. It's a bit of a wide range this time. People are expecting right from 2.7% to 3.2%, but we are gravitating with expectation of around 3% in terms of constant currency. Rupee revenue is expected to inch up by almost 4%. Dollar revenue closer to $4,870 million, with a bit of a margin expansion as well. So 21.3% is what the consensus number is as per ET Now poll. And all of this will trickle down into the bottom line. So a jump up of 5% sequentially, so that the number comes closer to 6,700 odd crores. Remember, during the quarter, they had made that Intech acquisition. So that's expected to add almost 1% in terms of revenue. EBIT margin is likely to improve, driven by the operating leverage and Project Maximus, plus the fact that the wage hikes have been pushed. There wouldn't be any impact this quarter. That also is a bit of a factor to watch out for. In terms of the large deal wins, well, Kotak is expecting a $3 billion kind of range. You have Citi expecting a $4 billion. So let's see which side it goes. But overall, the expectation is that the margin is expected to be 22 to 22%. But the top line growth guidance is likely to get improved to 4 to 5% versus 3 to 4 that they had told us earlier.
Okay, Infi under pressure ahead of its numbers, down 2% on the stock, about 2.25 million shares traded at that. But Naresh, how is it that you're maneuvering within the IT pack right now? Because the earnings have been a mixed bag so far, but what are the charts indicating?
So out there, stocks which have continued to show strength have surprised on the upside. So if you look at HCL Tech, the stock continues to make new all-time highs. Same is the case with the Tech Mahindra, which has been holding on to the recent 52-week highs. So out here, wherever the momentum has been strong, whether it's a Coforge, there the trends continue to be strong. The larger cap names continue to be a little more laggard. Say, for example, TCS post numbers has drifted lower. Infosys again is closer to the 52-week high, so that looks more positive. So any dip out there could be an interesting buy going forward post the numbers.
Okay, so that's the view coming in on some of these names. But quickly, let me mark Wipro as well, because we are expecting the numbers from Wipro as well. It's expected that it will be at the midpoint of the range. Last quarter, they had talked about a -1 to +1% kind of show in Q2. We are expecting that constant currency is going to be flat quarter on quarter. That's the reason USD revenue is expected to be $2,630 million with a margin profile of 16.6%, which is 20 bips better than what we saw last quarter. Profitability is expected to be almost 3,050 crores. There is going to be a bit of a positivity or a tailwind coming in from financial services. That's what we've heard from TCS as well as HCL Tech. But manufacturing is something which has been weak, and that might be a pressure point for Wipro. At least that's what we are penciling in at the moment. Operational efficiencies, the rupee depreciation, the overall tailwinds that might support the margin a bit. However, there could be a 1 month hike, 1 month impact of the wage hike. So that might be a bit of a limiting factor. For the next quarter, we are expecting that the guidance will be similar, as in -1 to +1, because they have been a bit conservative, and the large deal wins are expected to be close to $1.2 billion, in terms of the range. But I think with the new CEO coming in, there's going to be a bigger focus in terms of what he has to say about the demand environment, what he has to say about the roadmap that he had laid, whether they're on track with respect to that or not. Those are the things to watch out for Wipro as well. LTTS is the other one that will come out with earnings today, so we are watching out for that one. That's L&T Tech. Whether they maintain the guidance of 8 to 10% growth is something that we should watch out for. That stock will come up for you on the screen as to what it is doing ahead of earnings, holding up in the green. In fact, at the highest point of the trading session, is expected to come out with numbers in the next 30-40 minutes or so. So just watching out for that. Overall, for the market mood, it hasn't changed much. It continues to be HDFC group of stocks which are actually doing well today. In fact, on that note, let's listen into what the HDFC Life management had to tell us, because while yesterday the stock was reacting negatively to the VNB margin decline that we had seen, the management on the con call clarified about the issues and the one-time impact which has been there, and going forward how they're sticking to their guidance. Hear out what the management told us earlier in the day.
The value of new business will grow. I've said before, at about 15 to 17% growth, and we have demonstrated about 17.4% growth in H1. That will also continue. Reason that will continue is that is what will add to our embedded value and will over a period of time unwind to cash. So these will become real profits. So it is important that the quantum of profits is something that we don't say no to, because we are tethered to a new business margin. Third will be the new business margin, which will be an outcome. At the same time, I'm not saying that it will be in a free fall situation. There will be a floor to new business margin, but maybe 100-200 basis points or in that kind of a range. As long as we are growing on value of new business, that's going to be the focus. Last point I want to mention is a very interesting factoid, and that is of the new customers that, or rather of the customers that came on, were onboarded in H1, 70+% were new to HDFC Life. Now, if we say no to them just because I'm tethered to a particular margin, then those customers are going to go elsewhere. So customer acquisition as a strategy, so that down the line I can upsell and cross-sell to those customers, also is equally important. So to summarize, top line growth followed by value of new business growth, and then new business margins.
Okay, that's HDFC Life. Almost 7 million shares traded, and quite a recovery in the stock, much unlike the movement on the stock yesterday. But take a look at some of the other names which are kind of languishing right now in trade, and Polycab definitely is one such case in point. That stock lower, quite a fair bit. In fact, it's down about almost 4% on the spot as we speak right now. So that's definitely one stock. Rallis, on the other hand, very impressive numbers. That stock shot up very well today, and it's managed to stand on to its gains. About a 14% uptick still. The revenues have come in at about 18.5%, and the PAT more than 2x on a sequential basis. EBITDA margins as well have seen a fair amount of expansion. The management is now stating that they're targeting to grow higher than the industry growth, and the objective is to grow the market share in seed segment to high single digit. That's definitely auguring well for the movement on the stock, and biggest set of volumes as well. BSE, like we flagged off, there's a Jefferies downgrade. They're saying that the risk reward is now turning unfavorable. Remember, the stock has had a pretty much one-way, very swift pace rally. If you were to bring up the last 3-month chart alone on BSE, forget what's happened in the fortnight on the stock price. So that's BSE currently in trade. Pawan, where is it that you feel in the segments of the market where you think the stocks have run up too fast, too soon?
Yeah, so I think auto is one sector, we've hardly scratched the surface as far as the electric vehicle is concerned, but a lot of these companies are getting valuations as if EV is 20, 30, 40% of their sales. So this is one segment which we think, very clearly valuations, even at the OEM level, is completely unbelievable in terms of valuation. So auto is one sector where we still feel there's absolutely no comfort as far as valuations are concerned. Apart from that, if you look at other sectors, like for example, retail space, once again, some of the companies despite how much ever good the performance is, but valuations once again, absolutely something which cannot be justifiable. And on the other hand, in some of these PSU names also, a lot of the stocks have run up as if they are great Maharatna companies, which is a fact. We know that they are not Maharatna in terms of their efficiency, agility, and decision making processes. So these are few pockets wherein we are very clear that this is not a sector or segment we'll be looking at least for next 2-3 quarters.
Okay, point taken. That's the setup right now that we have at our hands, but very quiet at the index level, to be honest. We haven't seen very big ranges today in the kind of moves, because it is a Wednesday and financial services expiry still happens today, or Bank Nifty happens today, right?
Yeah, Bank Nifty.
Yeah, so Bank Nifty happens today, but there is not a big move in that sense in the 3 p.m. move that we usually watch out for. 100 points lower, it's Federal Bank which is reversing its move. Kotak Mahindra Bank is under pressure. ICICI Bank is also down in the trading session. Naresh, how much credence will you give to the level of 25,000 on Nifty, and the fact that we're likely to close below that, does it give you any indication of a further downside, or what's that line in the sand?
So that price point is 24,700 to 24,800, which was the recent swing low as well. A few weeks back, as well as recently it bounced back from the same price point. So that remains the most important level to look out for right now, rather than the round figure at 25,000. Similarly, on the upside, 25,500 is where there is a gap. If that breaks out, it goes into positive momentum. So this is like a 800 pointer range where we could keep seeing this one day up, one day down moves.
Right. I just want to check in on what the stock of Cochin Shipyard as well is up to. Remember, the government has okayed that 5% OFS, although it's at a discount of about 8% to the current market price. The stock, of course, is languished today from the word go. 5% lower is where it's closing in for the day. For the Nifty as well, it's a sub 25K closing that we're headed in for. Kunal, what does that indicate now going forward for the index alone?
Well, again, still a range for the index, but I think with today's intraday recovery, at least it gives some confidence to the bulls that maybe we may find the near-term support pretty much sooner for the indices. So 24,700, 750 mark, still remains to be a very strong support. We tested this twice, I think, in the last 3 odd months for the index, and on both the attempts, on 2 attempts rather, we've seen a bounce. Even this time around, we saw a bounce of 400, 500 points for the Nifty. So which means that maybe if in case there is a retest towards the 24,700 levels, we could probably get back into a similar bounce process for the index. But on the upside, the cap for the index is at 25,250 odd mark. So I would probably look out for this 500, 400 pointer range for the index. Right now, it looks like that maybe we should be heading back to the higher end of the range before we try and meet the first resistance at 25,200 plus mark.
Okay, point taken. So that's the mood on the markets right now. With that, Pawan, Naresh, as well as Kunal, we let you go. Thanks so much for making time and speaking with us today.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.